The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials down 82. We get the Nasdaq up 20. S&P's up 2. Gold contract up $8.90, trading at $12.65. You get silver up 7 cents, $14.89. They're both caught a bid. Gold, in particular, they have it has the volume, has the spread, all of the above, wants higher price. Notes and bonds, bottom line, still buying them. You get Powell, you know, we went up short-term rates, 25 basis points. They're looking for 2 rate hikes in 2019, but the bottom line, the market is buying the 10s, the 2s, the 5s, and the 30s. The 30s up a half a point right now, 148.18. And King Dollar gave it up. King Dollar's down 534 ticks, 95.950. That baby is back under the August swing area, which has been battling for quite some time. The Euro's at 114.41 to 1 US dollar. The yen is at 111.5 to 1 US dollar. And the action doesn't stop.
Do we have stuff going on in the market? What's going on?
I'm telling you, man.
Isn't it holidays? Everyone out to work? No,
holidays.
Fun? No.
7 trading days left in the year, folks, and that's including Christmas Eve and New Year's Eve. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do each and every day. And don't forget, folks, Kevin and his team have an outstanding show right here, 11 to 12 Eastern Standard Time, every trading day. If you haven't test-driven yet the Thinkorswim platform, very easy to do. Come over to our website at TFNN. You're going to see the banner right in the center. Hit the banner. Bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team as they trade defined options, strategies, as well as futures. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, I sat down to go on with you guys, and the E-mini futures were down 5. Now they're up 5. In a short period of time that we've been sitting here. And I think that's an indication, Tom, of how just I believe, in my opinion, that this market is absolutely oversold here.
Yeah, well, there's no doubt that it is. You know what's going to get intriguing here, Kevin, is that the dollar's been strong for a long time, right? So, you know, folks, I mean,
it's a big move in the dollar.
A big move in the dollar. The dollar is the deal that could actually save the market now. Meaning, I'm fast forwarded now 5, 6, 7 months, okay? But the bottom line is that if this is the final give-up, the dollar's been fighting this August 15th, since August 15th. You know, it went over it 3 times. 3 times it's failed. The last 2 times it's come back underneath it with monster volume. So someone's selling this thing, you know. So it's all, you know, correlation dollar-wise. If that dollar gets weaker, well, then, you know, guess what? It's just a correlation of what that number is. Yes.
That'll make stocks more attractive. And, you know, Tom, I really think that the dollar has stayed up at these levels and been strong for so long because of Brexit. And the uncertainty around Brexit has taken the euro and you know, and taken the euro down to low levels. I think if you get some clarity on Brexit, that'll be another leg down for the U.S. dollar. I think.
Yeah,
so there's a lot of things and reasons that could do that.
No, and what Kevin's talking about, folks, you can see the euro today. I mean, this is the first time that the euro is scaled. You know, the last highs going all the way back to the 19th of October. And you can actually make the case. You can bring it all the way over to the what's that? June 13th.
That's August.
August 13th. Yeah. So, see that August 13th, August 15th deal is a big deal. And what's happening is that the euro is getting back in above that right now. Yeah, there's no doubt, man. There's a lot of moving parts, man. You know, hey, listen, Powell, the Fed, they said, hey, we're independent, man. We're going to do what we want to do. That one statement, Kevin, about we have our job and we're doing it no matter what. That was like, did you see the S&P's went down 10 points when he said that?
Yes, exactly. Here's what I think, Tom. I think that Jerome Powell was dovish. It may not appear like he was dovish, but he was. He just wasn't as dovish as some of the expectations were, and I think, frankly, some of the expectations were not realistic.
Yeah,
and how dovish they wanted him to be. It's like they wouldn't be happy with anything he said. He was never going to go from 3 hikes to 1, but he did say data dependent. So he's not committed to 2 hikes.
No, he's not.
People are taking the dot plot that went from 3 hikes to 2 hikes on average, and connecting the dots to Jerome Powell, which is not accurate.
Right.
And we just pulled up the dot plot. I already had it up because I was going to comment, and everyone's talking about it, of course. Now, it has up there too, but what people have to keep in mind, that's a median. You got 6 of the governors in there that either say 1 or 0. So just something to keep in mind.
Oh, yeah.
You hear the 2 hikes, but yeah.
And the good news is, for people bullish on this market, he said data dependent, which means he's going to keep looking at the data. And unemployment is obviously extremely low and could actually tick lower. But the one thing that hasn't gotten involved is inflation. And we're going to get another huge inflation number tomorrow with personal income and outlays. The PCE is a big part of that number, and that's a nice inflation number. And guess what, guys? The year-over-year PCE, they're expecting 1.9%. And that's on the core. With the regular PCE for the year-over-year number, they're thinking it's going to drop from 2% to 1.8.
Well, you can see that. I mean,
for tomorrow's number.
If we go from October, from October, is that October 2nd? Yeah, October 2nd, we just went from $76 to $46 in oil. So that in itself, that's out of most of those things, we probably use more oil and gasoline than anything, right?
Right. So what you understand about that is say goodbye to inflation.
Yeah.
With crude oil below $50, right? I mean, look at the CPI number that came out last week. All the parts of it were up, except crude oil was down 4%.
Right.
And that took that to a 0 number, which, guess what? All the parts combined, think about this, guys. If there was truly inflation risk in this market, all these commodities would be a lot higher than they are right now.
Yeah, there's no doubt. It's going to be intriguing watching this play out.
Yeah,
but I think
it's going to be a great trade.
Yeah. Oh, listen, it's there. I mean, the bottom line, and of course, what you have, we have the end of this is it. This is the end of the year. The real question is that where are people going to position themselves going into 2019? I think the shippers, this whole FedEx deal, UPS, Amazon, it's going to be interesting to see whether FedEx was just slowing down because everything is slowing down, or in fact are they actually getting hit by Amazons in the world, Ubers of the world, delivery from food places of the world. I mean, all those little things, are they getting hit little by little all over these different new businesses that basically have been taking some of their business? So
right. Frederick Smith, the CEO of FedEx, came on yesterday, and he really strongly downplayed the competition from Amazon. He said they're a good customer, but doesn't see them as a competitor. Now, I don't know if that's accurate, but he should keep his eye on that.
That's for sure.
Optimistic view.
Yeah. Hey, Kevin, you have a great Christmas, because we're not going to talk to you until after Christmas, man.
Well, hey, have a great holiday season. All my best to the O'Brien family.
And you also.
You too. Take care.
Stay right there, folks. Tommy and I come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials down 130. Nasdaq is up 2. S&P's off 2.
A little bit of pullback in the last half hour, 5 minutes, excuse me.
All right, listen, you know, the bottom line is that all the indices, folks, are in an ABC structure on the way down. They broke B points yesterday, broke them with volume. We'll go over them right after we go over these natural gas numbers. But bottom line, we're going lower. Natural gas. So 10:30 natural gas out here.
Yeah, so we get natural gas every Thursday, 10:30. Quite a market, man, even from this morning. About 2:30, we're trading at 368. We trade all the way up to a high of 393. We're back down to about 379. Excuse me, getting over a little winter cold. So what happens here, we've had such movement that these really don't line up too well with looking for a volatility trade, because some of the shorter term duration spreads were lined up at around 390. Some of the dailies, just jump right now, I'll give you a glimpse. So the 11 a.m.s, 390 would be a price point we could use.
Way too far.
Yeah,
right.
The noons are going to be the exact, I say exact, 385. Excuse me. And the dailies even 390, being the 8 a.m. dailies.
Yeah,
and that's because at 8 a.m., just so we're up here. You know, we're up at...
We're at 390.
Yeah, exactly. And... you know, when you go back to the full dailies, you're looking at 370. Just so much movement. Doesn't mean if you just want to go one way, bullish or bearish, that you have options for defined risk.
Right.
But it really doesn't set up too well on that type of a spectrum. But, you know, bottom line, if you're trading natural gas, you better be, whether it's options, whatever it is, I would be in there with some defined risk, man, because, man, oh, man, you know, you're talking about 25 cents a movement, 15 cents back down.
It's 2,500. So...
You want to pull up the contract?
Yeah, it's 25 cents is $2,500. So this is just a mind blower.
Yeah, every dollar is going to be 10 grand,
10 grand,
right?
yeah.
Which is crazy in terms of, you know, we're only trading at 370.
I know.
So, you know, to move a dollar in a $3.70 commodity.
Right. So,
yeah.
The margin right now is 62.70.
Which is like 60. Can you say?
Yeah.
Before,
yeah.
I just wanted to go over those. And that's where, so, you know, we're trading at 379, and that's where the full value is 37,000, because every dollar is going to be 10,000. There you go, every point 10 grand, and yeah, you're putting up about 6,200, which basically means you have 62 cents of exposure before your entire investment is
Ba-boom.
poof.
Yeah, exactly. And if we just look at this, yeah, this doesn't have enough juice. So we'll see where this shakes out. But This is looking to me that it's going to go right back downtown. This thing's going to try to fill this gap down at 333. Not today, but that's what it looks like it's doing. If we go over to the gold contract, what you're going to see, this is a classic too, folks, is that, you know, if you've been around listening to us for a while and you have the out of time in the trade, this is an absolute classic. And what it is, you had an ABC up, turned into a complex one yesterday because it gave it up on price, and you're right back topside. Now, most of the time when you do this is pretty impressive that you're up the exact same the next day. You know, yesterday you went higher. This gold contract, 275,000 contracts. You're taking out 200,000, and it totally gave it up on price. You know, we went from 1253. You closed at 12. You went to 1262. You closed at 1256. Bottom line, all night long, it made it up. This projection here, it's a $40. So
and where's the AB, just so I follow? So
your A point is down there at 1217. That's going to be the the 27th. The B is at 1256. So we got what, $40, right? $39. Your C is at 1236. So you get 1276.
Okay.
And 1276 gets you up at those July highs, which is really cool because what you're going to see is that we go back into ABX first. You're going to see how the leaders have already been up there. ABX, yeah, it's the July highs. July highs 1359. You're at 1347. Rheingold also got up there because Barrick has taken Rheingold over. Actually, look at that. Rheingold's past them. That's pretty cool. Yeah. Rheingold's going into its February highs. Royal Gold. So watch this. Royal Gold came off the lows. This finally is starting to get some juice into it. Now this used to be the leader, but what you're going to see here too is it's very close to its. You know, it's not that close to its highs. Its highs was 98. But that's getting juice also. Franco-Nevada, that led on the way up. This is right at its July high. So the bottom line is that XAU, HUI, we're going. This thing is going. The dollar basically looks like it's finally going to give it up. Well, you know, the dollar is, the last two times what you're going to see is that we did come down with volume. You know, we've done 17,000 thus far, and the number on this contract to watch is the 95,830. Or 95,975. We got to 95,645, but you can see the volume expanded tremendously.
Okay, and that was August 15th, kind of that high you're looking at.
Yep. And then if we go over and you take a look at just the correlation, we were talking with Teddy Kegstad yesterday.
Yes.
About the yen. Look at this yen.
Definitely.
This yen, folks, almost gave up a penny last night. You know, right now, this yen, you know, we're at 111.58. 111.38 is the number. You know, this yen looks like it's going to. If I bring this back further, you'll see. Put it that way. So. 111.49. We're not. It'll get a little support here.
And that's the similar area, August 15th, 17th, whatever.
Yep, right. And then if you want to see the destruction when the yen gets strong, look at the Nikkei last night. This thing got taken apart. Man.
Sure.
Down $595. Volume behind the move. Broke. Let's see. That's 958 million. 998 million. Oh, look at this. An ABC down. So this is going to get interesting. So what is that number? That number is 24,448. Let's just say 24,500. You just remember that. Then
call it 21.
Yeah. So
3,500.
35. So the 35 off of 22,007.
So it's going to put it at 19.2.
19.2. Okay. So you're talking about another 1,000 points down.
It's only 5% of the index.
Let's go find 19.2.
Doesn't they say only, but, you know, as in...
Well, here you are here. That brings you back, yeah, see, that brings you back to December of 2016. What the problem would be here is this. On the Nikkei, the reason I'm going through this right now is so you can get some clarity on the yen, in case you're in the metals market, because this is saying the yen's going to get a lot stronger. And if we break this consolidation right here, Well, guess what? They're in the next level. This is,
and it jives with the dollar because, the huge move in the dollar, that's playing into gold as well, playing into the yen. That's for sure.
Totally. And as I had said to Kevin, when we get back, I'm gonna go through the small caps for you. What happens, folks? This correction. First, I've been talking about this February low for a long time. This correction is going to go further than that February low. And when you look at the small caps, it's kind of, it's really wild where I think the small caps are going to go. And if that's the case, there's some destruction coming out. You'll see whether I suspect we'll get bounces in between it, but these small caps are going south in a big way. November 2016.
I was just going to say the Nasdaq was just negative. It was positive 24 when we were talking to Kevin.
Okay, hold on for the ride. I mean, are you going to buy before Christmas?
You gotta buy some presents.
Yeah, I know. We're all gonna have some money to buy some presents.
There you go.
Stay right there, folks. Tommy and I come right back.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 160, Nasdaq's on 13.
Oh, sorry, I clicked away as I was doing that.
Okay, let's go to natural gas and take a look at natural gas.
There we go. So what do we have the numbers? Inventories falling 141 billion cubic feet last week. There's your breakdown in terms of East, West, Midwest, the whole kit and caboodle. Let's just jump back and take a quick peek at how that market is reacting. Not too much, really.
It's pretty remarkable, man. The moves that we've been getting in this market,
Right.
The inventories are almost, I mean, not that they're inconsequential, they are a matter of fact in terms of what's happening, but man, when you get 30 cents up, 15 cents down, and the number comes out and we're moving a penny, that's not the type of volatility trade. And even if these lined up, man, the premiums in these types of products right now with the way natural gas is moving, not kind of how we like to trade them usually. If
you want them to be right next to them, and you don't want the premiums to be a monster.
Yeah, so we'll check back in with 381 on natural gas.
And if we go, we're talking about the small caps, and we're talking about November.
Okay.
So
you better talk quick, man, because this market's dropping. It's going to be below all those lines before you finish this explanation.
I'll tell you, it's pretty intense.
All right.
So if you happen to be watching Tiger TV, what you're going to see here is that, thus far, you had the Russell come off the highs of 1742. We're at 1347. Now, what we've done is this. You've come into the consolidation that was in place from December of 2016, going all the way over to August of 2017. The problem, well, first off, when you do that, you're at the lower end of it. So my take is that we're going to go to the top of the breakout area from November 6th of,
I was just going to say, and that bar is the election, just to keep things.
Yes.
November 16, right?
Right.
Yeah.
Now, on top of that, now watch what happens here. So when you get into that bar, folks, the bottom line, if we get into it too deep, you're going to go to the bottom of it. Now let me show you this. Okay, so now when we go back, what you're going to see is that the small caps, as the rest of the other indices, also have done, they're basically breaking this whole consolidation with volume. That's a monster problem, man, because the way that you take a point projection from that, you take the bottom of this, then take the top of it and say, okay, man, the bottom. I'll go back to the RTY again for a second. So the actual indice. Let's see, why is that?
You have RYT, back it up.
Okay, so we take this. And, you take the bottom of this, 1351, you take the top of it, 1742. Well, what happens there is that when you break a consolidation, you can take that whole point thing and then minus it off the bottom of it. So it's like, oh my God, okay, that's a lot lower than that. I'm not going to do that, but that's a realistic way, technically, that, you can basically do price projections. And when I look at the aspect of the world markets, it's like, okay, well, that's game. You look at we're not even down compared to world markets, folks.
Yeah.
And they're not stopping, so.
I think I heard one point yesterday towards, I think at the closing numbers yesterday, the S&P off about 14% from just September.
Yeah,
staggering numbers.
Look at, it's down 7.5 now. Who would, October 2nd, I remember, and I'm going to back this down when we get off the show later, because I remember saying specifically that we have 59 trading days left. What a money manager's going to do? We were up at that point by 7 or 8%. Sure. And it was like, okay, man, if I was a money manager, I'd take everything off the table right now, because you could be a hero. Yeah. And it's like, are you going to go up another 7%? And
the tough part there, right, is that that's a quarter of the year. I know it's easy to say 59 days, but man, if you take money off the table October, November, and December, what are people giving you money for? Just to put, and rightfully so, right? But that's the tough part, man. It's like 59 days, but you're talking about 3 full months of the year. If you're in the business of managing money, man, it's a tough one to do.
It is.
I would say very few people did
and
that.
whoever did it is going to be the hero. We'll find out.
Sure.
And maybe no one did it. Because the reality is
that's
that
not the business they're in, man.
Yeah, exactly. Right. So, and it's going to. So listen to this, folks. This is a trip too. So what's going to happen this year? So there were a lot of pluses in the tax bill, but there was a huge minus in the tax bill last year for hedge funds that are actually traders, not investors. And what it is that you can't deduct the, so hedge funds that are basically set up for trading, which a lot of hedge funds are.
Sure.
Versus like private equity, or if you're going in something for a year or 2 years and all this,
longer
right?
term, whatever.
They can't deduct interest anymore. And so what's going to happen here is this. 2 different things are going to happen. You can deduct interest. So picture this. If you made $25 million and your interest was $25 million, right, this year, and you're a trading hedge fund, no problem. You can deduct the whole thing.
Okay.
Okay? If interest was $25 million, you didn't make $25 million, you can't deduct the $25 million in interest, and you end up, in this case, most hedge funds have lost money. So you lost the $25 million in interest deduction you have, plus you lost money.
Sure, you can only deduct it from actual gains.
Yes.
Versus expenses or operating.
So hedge funds are going to have monster losses this year. There's two that, this is, let me see if I can find the article. It's a great article. Yeah, there it is right here. Okay, so a surprise blow could be looming for investors in hedge funds such as Point 72. The tax law curbed the deductions that most businesses were allowed to take for interest they pay on loans during the tax overhaul. Private equity firms were the fiercest critics of the provision, arguing that it would change the calculus of the deals that got buried in 439 pages of the proposed regulations released by the IRS last month was an unfortunate surprise for investors in so-called trader hedge funds like Point 72, which trade stocks and other assets frequently. Their tax bills might increase as a result of the deduction limit. The rules create the worst possible scenario. We could go on, but that's how the scenario lays out.
So there you have it. The overhaul eliminates the deductions from management expenses investors previously qualified for. I would say that's kind of at the heart of the thing. In contrast, private equity industry was able to preserve one of the most widely reviled tax breaks for carried interest. They must have given plenty of money to the current administration to get that one through.
Exactly.
As in carried interest. That was one of the things that was actually at the forefront of the 2016 election.
Totally.
That both parties seemed to say that carried interest was not a fair way to be able to tax people for carried interest, when really it's basically income for most people and not a type of capital gains. You know, meanwhile, they're taxed at that rate.
Right.
Yeah.
Right. 877-927-6648. Let's go take a look at the XAU, the HUI. You're going to see both those cases, too. They are also in an ABC structure on the way up. You'll see that we took it out with nice volume. Here's the XAU. We did 54 million out here yesterday. Actually, the XAU did one the day before. It was the HUI yesterday that confirmed it on the way up. So it's going to get interesting here watching this whole thing shake out, because it looks like, you know, you can see that it was monster volume, 41 million versus 28. Because what it looks like, folks, is that, so here, let me go to the S&P, because this is the scary part when I started the story about the small caps. So if the small caps are going to November of 2016, look at this. You're talking.
Yeah, I can find it because it's always the election. It's that big day, right there.
That's 2182, folks. Yeah. And listen, we went up so fast. Guess what? You break the consolidation. See ya. Don't want to be ya. Stay right there, folks. Come right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we have the Dow down 83, NASDAQ flat, S&P's up 2. And as you come over to our website at TFNN, folks, you are going to see that we are doing our Tiger Dollar end of the year sale. You can get up to a 40% bonus. And bottom line is that as you go to TFNN, right under featured content, you can see the Tiger Dollar sale.
That's right, man. So this will run through the end of the year, December 31st. We have 3 price levels you can choose from: 20%, 30%, 40% bonus. Drop-down menus right there, whether it's 500, 1,000, 1,500. You add it to your cart, get it purchased, and then you can go in there, apply them to your account. And as I was just talking about it on your afternoon show yesterday, one of the things we worked on the new TFNN was the Tiger Dollar process. You apply them to your account, you'll see that balance, and then they are automatically applied to all future recurring transactions. So no matter what, whether you sign up for the Gold Report, Fibonacci, Mastering Probability, Opening Call, Path Least Resistance, automatically they'll be applied to those subscriptions until that balance reaches 0, which is great, man.
A lot easier way of doing it.
Yeah, you used to have to go in and apply them to those charges to make sure that they'd, just to make sure that you were applying them as you wanted them to be applied. But we just looked for feedback from subscribers, and they wanted them to be applied automatically. We worked on it, and that's the way it's done. So, if you're a subscriber out there right now, no-brainer, man. Get out there, get the Tiger Dollars, you apply them to your account. You don't even have to think about it, right? They'll use the Tiger Dollars, your credit card's still in there, your Tiger Dollars will be applied until they reach 0, then it will revert back to the card. And if you're not a subscriber, great time to get in there, man. You spend $500, you'll get $600, 20% bonus. You spend $1,000, you get $1,300, an extra $300 for Tiger Dollars to apply. And you spend $1,500, you get a $600 Tiger Dollar bonus up to $2,100. And the system's been working great for people who have already tried it. I'm sure they understand that. So current subscribers, new to TFNN, check it out on the front page. That'll run through December 31st.
It's hard to believe that we are right
2019,
here right
baby.
2019. 2019, let's kick it off. Let's go down to Costa Rica.
I like it. Let's bring some international flavor.
Let's surf those waves with our man, Mr. Jack Gleason from MajorLeagueTrading.com. Jack Gleason, what's going on, brother?
What's going on? I'll take you guys outside here. So I have a really cool level for you guys to talk about. You'll have to pull it up on your screen, but the high of 2000 and was it 2000 for the NASDAQ. So I draw those fib sequences from highs to highs. The high from the 2000, the tech bubble to the current high is the low of the NASDAQ right now within like a few points.
And this is the composite then, right?
Yep, that's composite.
The composite. Okay, cool. Okay.
Yeah, so that you draw it on the future. So I don't know if you pulled up a fib tool and drew it from the high.
I'll do it right now.
We're pulling it up. Perfect. And I love your balcony, man. Looking like a beautiful day in Costa Rica.
Yeah, nothing but blue skies. It's hard to catch on camera, but
Oh, we got a good view. You can even see that blue water, man. It's beautiful.
Cool. Yeah. How was your trip down here?
Oh, it was fantastic, man. We went ATVing up in the hills, man. We were surfing on the water. I mean, the waves are amazing. Coming from Tampa Bay, where we live in a bay, we got nothing. Now, we're from Boston, man. We're used to Cape Cod waves, so I like those waves, man. I like that real water. You know, it's beautiful.
Okay, so Jack, tell me this again. I have it up. That the high of 2,000.
Yeah, the high of 2,000. If you start your Fibonacci draw from the high of 2,000 and then draw it to the current high of what is 2018, so you have to go to like a monthly or weekly chart.
I got it. I got a monthly. Yep.
Yeah, the 50% retracement is 6306.
Oh, look at it. Yeah, I got it. I got it.
We're right there.
Okay,
Perfect.
cool.
60, yes.
So, it's just an interesting level because that's basically where we bounced yesterday in the Nasdaq. And then also the 50% retracements all completed. So there was a halfway back short in the S&P 500 that had a downside target of, let me pull it up here. It was 25.21 yesterday. So if you draw the high of 2018, which is what, that's September 29th, I think.
It's the S&P I believe he's talking about, yeah. You're talking about the S&P, right, Jack, now?
Yeah, now I am.
Cool.
I'm talking about the S&P. The high of... it's actually September 21st to the low of October 29th. That 50% retracement held in November, and then at the beginning of December, that completed its short target at 25.21. So bigger time frame levels, the way fibs work is then you would now take the high from December 3rd, which is that Monday high that we just have been destroyed off of, to the current low, and anticipate that 50% retracement to be major resistance going forward. And that level is 26.45, and it also lines up with the rollover of last Friday, as well as where the sell-off began. So that level 26.45 should be a major level that you guys watch moving forward. And it really just lines up nice and clean on the chart. You got the prior lows of October around that area, the prior lows of, once again, that held in November, the area we broke down from, and then the halfway back from the sell-off on December 3rd, all in the same area. That is, I think, going to be where the market is going to try to get back to. And then if we hold below that, we possibly could have another wave down.
Yeah, well, on the wave down, I mean, this market, all the indices, an ABC structure down, they broke all the B points yesterday with volume.
Yeah.
That's the other side of that coin. If A to B equals C to D, they blew those away, and the juice is behind the move. So it's quite a market, man. I mean, that's the bottom line, which is pretty wild. I bet you didn't think you were going to be sitting in Costa Rica in a market that was going south, though.
Yeah, I mean, I don't know. It wasn't looking good when I was leaving, just to the way we were forming. But yesterday I traded a little bit before FOMC, but I said once FOMC comes out, I'm just not touching it. I figured we were gonna have a 100-point day. Yeah. And the volatility, like if you're trading intraday, like I'm not gonna. I mean, yeah, it looks really attractive, a 100-point move, like sick trading. But the volatility is so high that I can't use proper risk management on individual trades. So I just stepped aside. We had a 102.5-point range in the S&P yesterday. I think it was like 960 in the Dow.
Right.
Just nuts, man. Just nuts.
You'll get used to it. You'll get used to it. You will. That's what happens, man. That's just how it goes. I mean, we've been going up since 2008. Bottom line, this is your first big cycle, so it's cool, man. I mean, it is what it is. Yeah.
The ranges are huge. I can get used to the downside. I like trading the downside, but I mean the ranges are what's like. I just had to change my risk metrics because I can't really use 3-point stops in the S&P.
No, I know, and it's so hard. What's so hard on a downside like this is that you've been down so far, and if you're going short, it's like, really, am I going to go short again? And then you see another leg down, and you say it's hard to comprehend. It really is, because I've been there quite a few times, and it is what it is, but it's hard to comprehend because you don't seem to go up dramatically, and then the next day you go up another 500 points. When this is way down, 500, give it a break, 500, give it a break, 500, and then it's like, okay, really? Yeah, it's
even today is young. We'll see what happens.
Oh, listen, man, it's who's gonna basically have any bread at the end of the day, man. Well, listen, you're in a good spot down there, man. It's a stress reliever.
Yeah.
Jack, thanks so much, man, and Merry Christmas.
Merry Christmas. Take care, guys.
We'll talk to you
Thanks,
next
Jack.
week, man. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 160, Nasdaq's off 27, S&P's down 6.5. The Nasdaq's getting some selling in here.
They're all getting, I think they were session lows since we've been talking, for sure. Speaking of session lows since we've been talking, natural gas, right? Quite a little acceleration. So we're down at 373. We were just down at 370. And when I said it was kind of cool is that, okay, now we are back to where those options line up.
Right. And you have to 230.
You do. Now we're 4 pennies away, literally in the span of, what was that, 45 seconds? Right before we came on the air, I said, this would be cool. Let's see what it costs. But you had, you know, your 370 to the bullish side. That was going to cost, it was going to be about 3.5 pennies in each one. When it was right at 370, you could have gotten in at about 373.5 on the bullish side, and you could have gotten in at about 366.5 or something. So you would have needed 7 pennies in either direction if you wanted both sides. But again, doesn't mean you couldn't just make a directional trade. But you know, it's there's some premium in there, as there should be when you have, you know, this contract moving the way it is. Pretty remarkable.
And if we go over to the S&Ps and just take a look at the S&Ps for a second before we finish up this hour and go on to
better go quick. They're dropping,
fast
man.
markets, you're going to see this E-mini out here. It looks like that also wants to go after the lows again that were established out here at the open, which is 24.84.
Yeah, so I guess we're not at session lows, but show lows for the program.
Yeah, because that's, you know,
for sure.
When we went higher here, folks, what you're going to see on this, we went right into that downdraft. It just stopped it in spades at 3 o'clock yesterday afternoon.
Could you pull up the composite, or the NASDAQ comp real quick? Because that was the one that was actually in positive territory, up by about 22 points when we were talking to Kevin. You're now down to 30. Yeah, we are almost at session lows for the NASDAQ.
Right.
Watch out.
Stay right there, folks. We got Fast Market coming up next, and we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Wow! Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.